Hello, I'm Ron Wilson. In this month's news, the federal government has released draft legislation designed to strengthen the governance arrangements for all APRA-regulated superannuation funds. Also on the regulatory front, the ATO has reported on the first year of its new administrative penalty regime to address contraventions of the ASIC Act by SMSF trustees. In international news, global growth in 2015 is expected to be marginally lower than 2014 at a projected 3.3%, with an increase to 3.8% expected in 2016, according to the IMF. In other news, the federal government has released a consultation paper on the introduction of an industry funding model for ASIC. Michael Pollock has the details.
The government has released draft legislation which proposes to strengthen the governance arrangements for all APRA-regulated superannuation funds. The draft laws were released in June following a consultation process. The proposed reforms include a requirement that all APRA-regulated superannuation funds have a minimum of 1/3 independent directors on their trustee board and an independent chair. A recommendation consistent with both the 2010 Cooper Review and the 2014 Financial System Inquiry. The government has agreed to make several amendments to the draft legislation following consultation, which include more detail on the definition of independent in the law, providing for a full 3-year transition period, extension of the period for filling a trustee vacancy from 90 days to 120 days, and clarification that the independent chair can be included in the 1/3 independent director recommendation. The ATO has reported on enforcement outcomes in the first year of its administrative penalty regime for SMSFs. From 1 July 2014, the ATO has had 3 new regulatory compliance powers to use in relation to the contraventions of the ASIC Act by SMSF trustees: education directions, rectification directions, and administrative penalties. Since the introduction of the new powers, the ATO has given 54 education directions, 27 rectification directions, and accepted 361 enforceable undertakings. It also made 92 funds non-compliant, disqualified 662 trustees, and 44 SMSFs were wound up due to compliance action. Global growth in 2015 will be marginally lower than 2014 at a projected 3.3%. with an increase to 3.8% expected in 2016, according to the IMF's July 2015 World Economic Outlook. Growth will be driven primarily by the advanced economies, which, despite a small setback in economic activity in the first quarter of 2015, have the necessary underlying drivers for a gradual acceleration, including easy financial conditions, more neutral fiscal policy in the euro area, lower fuel prices, and improving confidence and labour market conditions. In emerging markets and developing economies, however, lower commodity prices, tighter external financial conditions, structural bottlenecks, rebalancing in China, and geopolitical instability are expected to act as brakes on growth. China's economy has continued to display warning signs that have spooked investors, resulting in considerable volatility in major share markets in August. Earlier in the month, China's central bank, the People's Bank of China, allowed its currency to devalue 2.8%. The Caixin Flash Manufacturing Purchasing Managers Index, or PMI, was weaker than expected, down from 47.8 to 47.1 in August, its lowest level since March 2009. Other key sub-indices also showed weaker results, including new export orders, new orders, and the employment index. The US housing market recovery appears to be gaining momentum, with housing starts rising to 1.2 million in July, which was ahead of expectations and reached the highest level in almost 8 years. Existing home sales also rose 2% month-on-month in July to 5.6 million, its highest level since February 2007. Home purchases have now risen 10% in the past year. Economic strengthening across the Eurozone seems broadly on track, with domestic demand recovering and inflation on the increase, resulting in growth projections for many euro area economies being revised upward. Growth in Eurozone economic activity was holding steady in August, according to the Market Flash Eurozone PMI, which was up slightly to 54.1 from July's reading of 53.9. Growth is coming from both the manufacturing and service sectors, with rates of expansion accelerating and companies reporting increased levels of incoming new work. The outlook for the Eurozone economy also remained on the upside during August. Alongside growth in new orders and employment, backlogs of work rose at the strongest pace in 51 months, suggesting the current demand is testing capacity. Australian home loan borrowers have moved in increasing numbers to fix their rates in July, according to the latest national home loan approval data from Mortgage Choice. Fixed-rate home loans accounted for 18.5% of all loans written throughout July, up from 17.6% in the month prior. Mortgage Choice CEO John Flavelle attributed the increase to announcements by many lenders that they would raise their interest rates across some products. Many of Australia's lenders continue to make some significant changes to their lending practices in a bid to curb investment lending growth, Flavelle said. The RBA kept the official cash rate at 2% at its September meeting, despite significant volatility in financial markets during August and rising concerns over China's economy. The decision represents the fourth consecutive month of rates on hold since the cash rate was cut to a record low 2% at the RBA board's May meeting. A statement by RBA Governor Glenn Stevens expressed little change from the previous month on the need for accommodative monetary policy in Australia, while noting some further softening in conditions in China and East Asia. Stevens also highlighted the likely scenario ahead of the US increasing its policy rate as other economies are lowering theirs.